Welcome back to this another live session, traders, for the third week of the trading week, third day of the trading week, and last week of the month. We are almost nearing to the closing of this candle on the monthly. As we are progressing, today is the most important day of this week, as coming up FOMC. We'll be coming on live on FOMC as well. So make sure, guys, to like this stream and also subscribe to the channel if you haven't done yet. Press the notification bell so that you are not missing any of the content that I'm posting every day. That being said, let's begin today's trading session, starting with gold, and also you'll be looking at a couple of pairs. Dollar yen was in a bullish move again, back on the lower time frame. We have seen there was a rejection. And euro dollar, we can see there is a bounce and a rejection back again, which could bring that price back again below. From the bigger picture perspective on euro dollar, currently getting a rejection from the higher price. And we can look at also the DXY. We can see there is a bullish impulse on DXY, as we discussed in our previous weekly Forex forecast as well on DXY, that the market to retest this neckline of this inverted head and shoulder. That means from this order block, the price to potentially bounce off the level. You see there is some kind of reaction coming here, and that could bring that market potentially back above here. So if DXY is getting bullish here, we might see that the mirror effect on British pound US dollar that you can see, which is currently in a bearish trend, and also euro dollar, we can see there is a daily bearish trend. So we'll be looking at some of this instrument. Gbpusd currently showing significantly bearish. It's in a bearish trend on British pound US dollar. That being said, looking at euro dollar and British pound US dollar in the side, while also we are looking at gold, and gold is bringing in the watch list. We can see that gold has had a very sharp rejection. Now, looking at gold price action, guys, ready for a big move. And we can see that gold in that area earlier that I was looking at this market for, we saw that the market has tested the trend line, which is this support here, bounce, this support here, bounce, this support here, bounce, this support here, bounce. And the market is in a bullish impulse that you can see on gold. And with this bullish impulse, as the market is maintaining this uptrending market structure here, and looking at first of all daily chart. Now before we go to the daily chart, also you'd like to see that multiple time frame analysis here on gold. Now previous two trades that has exactly entered in that area, if you look at, the trend was quite important. If you look at this market drop from this lower time frame price action, and was that move here in this instrument on 1 minute chart. One of the most important part that as a trader that you need to look at is trend. We always discuss about that. Now in this trend, when the market is in a trend, what we see here, that the price has crossed this high here, grab the liquidity, After multiple liquidity grab, the market strongly rejected back below. We need to look at the entry from such an important level, and that's the secret of bigger win. Bigger win is only the way that you can keep your trading account growing when you look at the bigger win. Are you excited about bigger win? I hope that the stream is on. Say yes in the live chat if you can hear me, or you can write why. Much appreciated. Now, previous daily 2 trades cleanly open and closed in profit. Now, looking at today. Now, first of all, when we are looking at the lower time frame entry, especially on 1 minute chart, if you are trading on the 1 minute chart, do you trade on 1 minute or 5 minutes? You know, there was a myth that I heard when I began my trading, that trading on 1 minute is the lower time frame. You can't make money from trading 1 minute. We trade on 1 minute. In this live session, you guys have seen that every single day, and we are making consistent profit every day using this 1 minute chart. Some of the trade, not some, all of them that I am opening, also I'm going to share in the premium group. If you look at that trade just opened in our previous trade, exactly the entry was sent, sell by market, we entered by market, stop loss was at this level and TP target at this level with a take profit here, and it smashed the TP before even it reached the TP. If you look at here, we sold at 3919 level and TP hit at 3912.63. So 3920 to 3912, 80 pip on one single drop, right? And it's a live trade. You guys see the entry is here, right? You can see the entry is here. Stop loss at here, 3926, stop loss here. TP target at 3906. We are almost 80 pip on this trade and we have closed that. And this is a screenshot, a live screenshot from the premium group. And that trade, in fact, has moved a lot. We have kept opening further position. If you look at this one on the NY session, also in this live session, go to the previous day's live and look at, review the chart. That's where you will learn the actual trading, seeing how in the live market to trade and how the market moved as expected. Now, how can you replicate the system? That's why the stream here. You see, the market had many other moves along the way. It's now moving back again in the direction of the major trend. So daily chart, if we look at the daily price action, how do you see the daily market? This is a big drop here, and now gold is going to be bullish, FOMC later today. Do you think? Thank you. AUD USD, yes, welcome. So euro dollar along with AUD USD, if we look at, and from the calendar perspective, AUD USD, earlier there was a positive news on CPI on 3 of them, and how does that has influenced AUD USD? And you can see that there is a significant bullish impulse on AUD USD. If you look at from the daily chart with the fundamental move that you can see on AUD USD, that has given a stronger momentum on Aussie dollar, and you can see there was a gap open this week and the market is on a bullish move. From the monthly, it's approaching this monthly resistance line. This is a long-term bull market. You can see from this low here on AUD USD there is a significant bounce. So if you look at the 4-hour chart here, that you can see the market has maintained this series of higher low in that area, which is in an uptrending market structure. Because it's in an uptrending market structure, this is where AUD USD getting now stronger. AUD getting stronger against dollar due to some of the fundamental factors that if you look at earlier with the CPI has shown the data. So pretty optimistic that if you look at 0.8% was forecast, 1% has come to be so projected 0.8%, actual 1%, projected 3.1% CPI, it came out to be 3.5%, projected quarterly CPI was 1.1%, and actual data came out to be 1.3%. So the positive data has given a pretty stronger impulse on AUD USD. And currently, if you look at the low of this structure here, long-term trend on AUD USD is bullish. So we can see that with the gap open, it's pushing back to the upside. So we might see that from the technical AUD USD to potentially break that 0.6707 level or even crossing that high. So for us to enter AUD USD, we will be looking to bullish entry, as we see that on DXY. If you look at DXY currently on a resistance line, right? So this is the daily price action, and because AUD USD is unevenly stronger than euro dollar, euro and Gbpjpy USD, AUD USD may remain upside here for a bit more time. If there's a gap open consolidation, there is a breakup structure here. So any pullback or breakup structure on AUD USD can give us potential buying opportunity in this instrument. While we can see the lower time frame price action, looking at gold here, that this is a support level on gold. And now also guys, this is a very important correlationship. If you know, if you are familiar with that, there's a very correlationship with AUD USD and gold. This was in the past was more than now, but still it's the same way that gold and AUD USD are highly related. Do you know that? And also, do you know other related currency pairs? The currency correlationship is very important to look at. And there's a reason behind it. If we look at the reason is Australia, one of the largest gold producer in the world. So if you look at the chart here, you know, understanding currency correlationship will give you a better understanding of how the currency pair moves along the way. So if you look at here, China is 368.3, while Russia 331. So basically after China, Australia and Russia is same, but because we trade mostly AUD against dollar, and you know CNY, it's exotic currency, we don't trade CNY. So basically in terms of gold, if you look at GBP is 190. All right, so basically if you look at the euro or GBP with the gold price movement, is mostly is AUD. So if you are trading XAU USD, basically you are also trading gold, because like AUD USD, they are highly related, and that's why looking at AUD USD price or the data coming up on AUD also highly influence the gold price. And that's what you can see, that with the strengthening of AUD USD, we can see there is a movement on gold also, and with the bullish move on Aussie dollar, also gold is heading back to the upside. Now, as we can see the market, if you look at, there is a series of higher low here, and with this series of higher low formation on if you look at the 1 hour chart, as AUD USD is in a stronger bullish move, so AUD against dollar, XAU USD against dollar, right? So basically that's the move. So when you see that AUD getting stronger, AUD USD going up, gold also going up, they are highly related to each other more often. Now, that being said here, what do we see in this market? Now, currently the price, if you look at the daily chart on gold from this support level, the price has tested the lower shadow of the previous daily candle. There is a long wick candle has created on the daily time frame on XAU USD. If you look at, and from that support level, if you look at that on this is where there is a series of higher low formation that you can see. Okay, if you look at series of higher low, and because the market is maintaining that series of higher low here on gold, and that is where there is an inverted head and shoulder formation, and with that inverted head and shoulder, that you can see the market now approaching that resistance line. You can see there is a channel here in this market. Now in that channel, if you look at, it's a bullish channel, right? And above this level is where there is a bearish fair value gap, and there's an imbalance in the market, that there is a potential change of trend. So we can see the market is slowly building its bullish momentum back to the upside here in that area. And so therefore, if we look at the 15-minute chart, that as the market is heading back to the upside with this uptrending momentum here, we can expect the price to continue to rise back here to create a new higher high in this market. So dropping down to very lower time frame here, this is 1 minute chart, which is a stronger bullish trend continuation. We'll be waiting for another break of structure here in that market. So that being said, we are looking at this price action here at the moment on gold. As we see this established now lower time frame and uptrending market structure. When the market trend is established, yesterday also we discussed a lot about that. This is the key here to look at how to find an entry area when the market is in a trend. So looking at the trend is very important. If you look at here in this market, now when you look at the trend, what do you see? That it's a very, I would say, the obedient trend, right? Obedient trend means that there is no break of structure. Now when the market breaks from this trend, that is where the entry, right, which is the market is maintaining this trend line here in this market. And because the market is maintaining this trend line, all right, so which is maintaining the series of higher low starting from here, and because the market is maintaining this series of higher low in that area, we can expect this market potentially to break from the trend line and then to break any of the swing low, and that's where the entry. Because if we look at the 1 minute and 15 minutes combining the multiple time frame, Here you can see on the 15 minutes there is a crossover of 10 and 20 EMA. And because there is a crossover of 10 and 20 EMA, it is now an established uptrending market structure. Now, with that is uptrending market structure, the current 15 minutes support level is here, which is the previous support area. And in that support area, that we are expecting the market to drop back down to this trend line and to give us a potential entry. This breakdown, if the market is coming back down as there is an FOMC coming up, we are looking at an entry in the direction of the trend, right? The trend is up, ready for an entry. Here, the key is to maintain a strict risk management, which is very important to become as a trader. To maintain that, there is a successful risk management is very important to when you are trading with the trend. There is a break, and that's what we want to see at the moment in this market. For this is the 15 minutes candlestick pattern to break that low, as the trend currently is up. This is the 15-minute chart. We can expect the market to cross this high here, 3982 level, and to cross the 3982, we want to see the deep end of this move back below to this intraday support level. Breaking below here can give us an entry opportunity for us for this trend continuation. And this is the trend line, waiting on a break of trend line. Patience is key, as I mentioned earlier. It's a series of higher low. We can enter here, but you want to take the high probability setup. That is becoming a trader. That means you become fully in a zone where you only enter when the trade goes in according to your strategy and set of criteria. And that's what the outcome is. If you look at the previous trade that we have opened, right, it's exactly where we entered. This is the NY session trade, right? When the market created the consolidation pattern, it's a full consolidation, break up structure from that consolidation with back-to-back two stronger liquidity grab, and the market boom has broken back below from that consolidation, which is now maintaining this downtrending market structure here in that area on gold. And the previous trade was open in London, so that was a massive move that you guys can see, and both trade has taken from a breakup structure. If you look at, you can see whenever the market breaking from the structure, creating an opportunity to sell the market. And the same trade also has been shared in the premium group as well, with entry, stop loss and take profit target, and every update also I'm going to share in that group where you guys are trading together. Now here is where the market consolidating on the lower time frame, right? This is a 1 minute chart. We're expecting the market to trend further back below. This consolidation is a potential further deepening of this trend, and when the market breaks from the structure, that's where it gained new momentum. So directionally is always to look at higher picture, right? Bigger picture, that which way the market is heading back. Market form M pattern in 30 minutes. 30 minutes. So yeah, 30 minutes, 15 minutes, they're all currently representing potentially bullish impulse. As they, if you look at the long wicks, every candlestick pattern will give you an understanding of the market movement, right? Every long wick candle, every candlestick pattern will tell you a story. Reading candlestick pattern will give you a much better understanding about how the market moves. Guys, if you are enjoying the live session, make sure you like this stream. Did you like? I'm pausing for 1 minute so everyone can smash the like button here. That's awesome, thank you. And when you look at that market 30 minutes chart, you can see there's a long wick candle, right? And because there is a massive long wick here, that long wick represents that there is a stronger bullish buying pressure, right? If you look at that long wick, what does that represents here? Buying pressure, right? Because the only way a long wick candle will create is that there is a stronger buying pressure. And because there is a buyers, when the buyers buying, the market is going to go up. That's very regular trading rules, because when there is more buyer, the market will go up. There will be more demand for it. And when these long wicks create series of higher low, that is where the things get interesting, because it is creating series of higher low, right? And then long wick. How do you read that market? How do you understand that? Because once you read the price action, you started to see that the picture in the market. Guys, keep in mind that trading is like a book, but it's a different language. It's a language of pattern. It's a language of price action. And once you can read that language, you started to become a better trader. And once you learn that skill, you don't have to look back again. That's a freedom. That's what our goal here is, to help every trader coming along the way. And every single day we are doing the live session and also doing regular conducting classes in the premium group to help you to know that exactly how those price action form. Now we have learned that long wick, this kind of rejection creates a bullish pressure, right? But how does that higher low? That means there's another long wick, there's another long wick, but these two long wicks will tell you a very important information here. How do you read that information, right? That's where becoming a better trader. So let's understand that there's a long wick here and there's a long wick here, but one is higher than the other one, right? So understand it from sporty perspective. Trading is like a sports rather than any other traditional business. That's why, because that's why to be a trader, you don't have to have a fund. You have to have the skill set. When you have the skill, that's the paradox. You don't need any fund to become a successful trader. You need the skill set. Therefore, it's not any kind of investment or business, but it's a skill set that you need to develop. So therefore, you have anything or you have nothing, you are able to become a successful trader that can change life completely by becoming a profitable trader. So let's understand how you can apply the sporty knowledge of being a trader. Creating a series of higher low with a long wick candle. What does that mean to you? Now imagine that when the market open here, right? This is a red candle. The prices drop to that level, right? In that level. And then with this candle, the same thing. The market open here, the price drop to that level. In both cases, when the market open here to drop that mark, that far, okay, it's a bigger long wick candle, and to drop that price back below to that 370 pip drop. Imagine that it's a battle between buyers and sellers. So to drop that price seller, there will be, let's say, 10 seller needed to drop that price from this level to this level against buyer. Now when the market is here, what happened? The sellers couldn't drop this price that far. In that case, if you compare this length with this length here, there were 6 sellers needed to drop this price. That means 4 sellers quit. You see what's happening? So that means the more progression happens, more and more seller is quitting that game of trading. So that means who is becoming stronger in this market? Who is in control of the market? Buyers. Because the more length you are progressing, less and less seller available. Push that market down. That's the sign that the market is creating series of higher low. And when we say that creating series of higher low, that means less and less seller available to drop that price. Therefore, if you consider 100, right? If out of 100 here, 40 seller drop that price, and then there has been 30 seller drop that price, there has to have a balance always. So if out of 100, if 30 seller drop that price, that means 70 seller buyers brought that market up. When it became 20 seller drop that price, that means it became 80 buyers bounce that price back up. Now it's becoming less and less that it is becoming a buy, that means bull market. That's why it says the bull or bear market. So it is becoming a bull market. That means in that market will be only buying. How about at some point you would see the market suddenly drop like that? That is where the fake move, because when you see that there is no enough supply, but there is a sudden drop and breaking that trend line, that's a fake drop, and that's where the new buying opportunity comes in place. So that being said, if we look at, that's where we see liquidity, the grab, and that's where the bigger move comes when the market drop from such an important level. So at this point, we can see the market is now, we understand that from the technical and also from the fundamental perspective, it's a bull market. Now in that bull market, if we look at what we are looking at this level, right? What we are looking here is, this is now established bullish trend market. Prices cross that swing high here and now getting the rejection. Would like to see that now break up structure potentially coming here. The 15 minutes candle closed, and that breakup structure is where the opportunity will come for us to enter again in this market. Okay, so you see the breakup structure. That's where you can see the market has broken from that structure after this, creating a new higher high, and that is where potentially coming new bullish trading opportunity in this newly developed uptrending market structure. After this imbalance here in that area, the price has managed to, now if you look at this series of higher high, the current swing low is here, and expecting the market to trend back in that area and then to create a new higher high in this market. And we can see the price slowly breaking that trend line. We see multiple liquidity sweep here in that expecting it to now on the trend line, as still the market didn't break that structure. There is a drop here, and this is the first swing low has broken. There's another swing low here. The market still can continue to rise from here, but the best entry will be once the price has managed to deepen well below, as there is a new higher high has created in that market. Welcome back to this live session. We have started another big trading day. Today is FOMC, and would like to take the biggest move. You guys are ready for this one here coming up later in end of NY session, and we'll be trading the FOMC as well. And in that FOMC, we'd like to see how the market is potentially creating the structure throughout the week here. And as we can see, the market currently in a trend. So if you look at here, you can see it's a bullish trend at the moment, and would like to see that the price is maintaining this uptrending market structure here. And we see there is a breakup structure, which is an important zone that you want to see the price break from the trend. That's where you can enter the trade as soon as you see the market has created a new lower low here in that market. Okay, so you see that there is a break below, and From the 15-minute chart, it's on a pullback. So there is a breakup structure here. We'd like to see the market is heading back here for another new higher high. And if we look at the 5-minute chart, that you can see there is a potential trend continuation in this market. Daily chart is approaching the bull market. 4-hour chart also showing up the market to potentially remain upside here. You might be able to find an entry in that area. We'll be waiting to see how the market is reacting to that level, as there is a breakup support here, expecting it to have a rejection from this level. And I'm going to go long for this move here to the upside. We'll be buying from this level, keeping the stop loss below this swing low here, so nearly to be here 43 pip stop loss for this potential bounce of this level in this market. This is a bullish trade that I'm opening on gold. Long stop loss at 3973.36. It's a very tight stop loss trade, and TP target primarily at 3984.55, and expecting a quick move here to the upside in this market. And it's a buy by market with a very tight the risk and a stop loss. There is a rejection here, and you might see some deeper move. So we place a very tight stop loss, as you can see. Open buy here, and my trade is running in profit at the moment, expecting to break that high here with a rejection to the major direction of the trend. It's a very fast move trade, so we'll not be taking so long with this trade, and as soon as we see enough profit target reach, we'll be going out with the trade, expecting it to break to the upside here, though we might see some rejection here that on the lower time frame, expecting potential trend continuation back here. There is another doji, back-to-back few dodges, and once the market reach that high, nearly to 40 pip up, we can take the trade out. Currently it's on an upside here, boom, moving up here, expecting it to go up further. So we are up to nearly to 18 pip. Would like to see that continuation back above, guys. Like this stream if you are liking, and make sure you do the risk management. This is after 2 trades yesterday you closed in profit. Would like to take this one as well upside here. This is a quick gain, quick scalping trade, and moving up. Still I'm holding on to that. Right, so moving up here, 35 pip, and I'm taking profit right now with this trade with 35 pip profit taken. Profit taken. Profit taken on gold. And did you like this stream? Did you smash the like button here? Awesome. Like your feedback, guys, in the live chat. Or did you enjoy the trade? Awesome. How many of you have smashed that? Awesome. Profit taken. And it might come down for a deeper pullback, or we might see the continuation back above here in that market. But smaller lot, but it's okay here. Now you see that when the market even started to move, we have taken the trade. Amazing. Well done. Well done. Now, in this channel only we take like that, right? In this channel only we take trade like that. I am little aggressive trader, but to be a trader, you have to take action in the right time, but with proper risk management, right? Being aggressive trader means you are more profitable than anyone else. And doesn't mean that you do bigger risk. Aggressive trading brings more profit if you do the risk management, right? Aggressive trading means that you take action when it needed, but with calculated risk for each trade. Each trade that I open with must be stop loss and with proper risk management, and I don't deviate from my strategy. I don't deviate from my strategy, and I share every trade exclusively in the group, exclusively to the members who are trading with me, because the best way that you can develop a trading psychology by learning how trading works. Now, it is important that, guys, as a trader, that you always develop a trading psychology that will confirm your overall growth as a trader. Keep the profit in your account by not over trading, by not FOMO trading, but by trading with risk management and trading with the trend. Let's take a deep breath, okay? And then look for the next one. Whenever you in most cases you see that every trade that you are opening is on the go. Whenever you're winning, make sure you take a break, small break, because that is where suddenly there's a chance of over trading. Take a small break, few minutes, and then reanalyze the chart And that's what I said, that look at from the beginner mindset, which is very important to look at. Now, beginner mindset, looking at the chart from a fresh perspective, means that every moment, right? Every moment, the market structure is changing. And when the market structure is changing, there's a new market structure that you can re-enter again. And that is what we are looking at. If you look at, guys, the trade that we have just opened, right? Now, let's understand the nuance behind the trade. Let's understand what is the factor has been considered when the trade is open. The most important factor, the number one that we look at, Nikola Tesla, famous inventor, once said that he is the pioneer of AC current, right? You won't be able to see that AC current without him. So many other invention that he has invented in his time. One said that if you want to know the secret of the universe, then think in terms of energy, frequency, and vibration. That is all it is, because those who think very deeply, they think from a very, very fundamental perspective. If you go to the fundamental aspect of this universe, then you will find, in fact, that is all it is, right? And if you go to the physics, quantum physics, that's where it is, right? Everything is energy. Energy cannot be created or destroyed. It only can be converted from the one form to the other form. That's the law of conservation of energy, right? So if you go to the very fundamental level, that means if you go to the subatomic and then break that further law, then you will find only wave of energy. And that energy is all about permeating everywhere. The form that you can see in this bigger picture is where the information, concentration of information, or the energy that is appearing as a form. So, but if you go to that fundamentally, you can see that everything is energy. And that energy has, if you look at the wave, that what do you see? The basic sketch of a wave like that. This is a sine curve, right? Look at the electromagnetic wave. Or if you throw a stone on the pool, then you can see that wave. So wave doesn't move, it just transfer energy through vibration. If you throw a stone on the water, what do you see? That a pool, a circle is getting bigger and bigger and bigger and bigger. Why? Because it just, if you place a foam on the water and then throw a stone, well, you see that there will be a circle will round around and then will move away, but the foam will not go with the circle. That means the actual object or the material molecule is not being transferred or moved or transported. It only transfer energy through vibration. That means this wave is just a vibration of the higher and lower, and that's the wave that you can see. The sound also a wave, right? If you don't have air, that you can't hear anything, that's the wave. And because the actual material is not being moved, just through the vibration, energy is being transferred from one place to the other. That is, you wanted to say, right? Through this high and low. That's how the energy being transferred. The market is no different than three very important aspect in the market is the market structure, liquidity, and price action. So the market structure will give you the direction, like the wave that you can see. And then after the market structure, it's come down to the price section, will give you confirmation of the entry when the buyers and sellers, what they are doing at that moment in time. And then liquidity, when the smart money is buying the market or selling the market. Now you can see the market from that same level has got rejected back above and is still moving in the major direction of the trend. Now if you look at here, this support that you can see, what did you see? That this is a key support level. The market has crossed that level, grabbed the liquidity and rejected back to the upside here. And from that zone, this is where the smart money bought, right? When we entered, the market was dropping. It's a very tight stop loss. If you look at a very smaller stop loss here, nearly to 41 pip on gold. That's absolutely smaller stop loss in that movement that you can see in this market. Now the market is still moving in the same direction. If you look at, okay, so now ready for the next one. Let's look at again. This is back-to-back 3 trades that we have opened so far. This is one is here, this one is here, and then there's another one is here, right? We have taken that move and is still moving in that direction here. Now that being said, as the market is moving, we are looking at an further entry opportunity. So if you look at the 15 minutes and the 30 minutes price action, you can see there is a bullish impulse from this candle close. After this initial pullback, the market is showing up to be upside here. There is a pure imbalance to the upside here. There's the next level that you can see. If you look at the daily level, the previous daily high is here, and the market is now strongly bullish in all time frame. So therefore we might see the market is merging with the long-term direction of the trend. If you look at the monthly, you can see that it has got rejection from this monthly support level. If you look at the weekly here, the same thing that you can see the market is approaching. If you look at the daily here, that you can see the market is approaching. So therefore lower time frame price action that you can see on the lower time frame, the price is from this support level getting the rejection back above here. They're expecting the price to cross that high and potentially to continue to trend back to the upside here. Now with that breakup structure, the market has created an order block. We have bought exactly from the order block. We have bought exactly with the smart money, and that's why the market has moved that far. If you look at, no retail trader can move that market that much far. To move gold market that far, you need a huge volume in the market. When you bought, there has been huge volume in the market. Otherwise you wouldn't move that much in that direction of the trend. So stay tuned for that, for smart money trading system. Now if you look at that move from this order block, the market from this order block with this retest of this support level has got rejection back to the upside here in that market, which is now showing up to be potentially bullish trend continuation here. Now what we are looking next, patience, right? We are looking at next patience. We don't look for trade now. If you look at, since yesterday we opened 3 trades and 3 of them winner. I have shared every detail in the premium group. If you are missing that, look at that, go back to the group, check every detail of the trade and it's on live. You can go back to the live session and cross that live session as well. Now how can you enter the next one? The first step here is to be patient and wait for again the break of structure, and that is where the next entry, the trend continuation that you can see, and first break of structure that you have experienced here, and we have entered. So you see there is a consolidation. Suddenly the volume dropped. That's what the market does. You have seen in the past also. There's a move and then the slowdown. So this is where now this is a consolidation, accumulation of order. And that accumulation phase is where there is liquidity grab again for another flight, either back to the upside or from this break from this structure here back below in that support level. And if we look at the 5 minutes and little higher time frame here, you can see from this support level, this is a move back to the upside in that area, expecting the market to potentially trend back further below to this support level and then to trend back again upside here in this market. Now looking at the 15 minutes chart again, that looking at this market here after this strong break to the upside here in that market, we can see there is a bullish impulse. The price has crossed that high here, now completely back to the upside, and with that break of this resistance line where the continuation of this uptrend here in that market. With this uptrend here, expecting the market to continue to trend back here and then to create a new higher high here in that market. So this is where at this level the price potentially could drop back down, and we see there is a an reversal pattern is being formed, but still I wouldn't consider it that it is being a reversal pattern for another move without breaking enough below here, because the market has left again two distinct fair value gap. This one is a big one. So if the market break that low here again for another drop back below to this support level from that zone, that is where we are looking for further entry once it managed to break well below this support level here in that market. So you see there is an inverted head and shoulder. Now the market may play out that inverted head and shoulder to create another new higher high, but the next level here is in that zone with that break below, and then to re-enter back above here. If we see that happen, that's where we are another trade to look at. If it doesn't, then we will be looking to see that where the market is heading back to the upside. As the market is approaching this imbalance, if you look at the previous daily high 4019 level, and that move is very high probable that the market will cross that high and potentially to continue to trend, because FOMC big day, guys, and this day is where the market had most volume, and you want to take that move back to the upside with the FOMC coming up. So you can see that lower time frame price action breaking that low. That's where we'd like to see the price to cross that completely back below here to re-enter again for another bounce back to the upside here in that market. Retrench again. Approaching that support that you can see, and so getting the rejection here after break of this support level, and we see there is a 1 hour candle close coming 30 minutes price action here, which is forming a doji. Now we like to see how the market is reacting to this support, and that support as broken means that you could see now potential trend continuation. Once the market managed to break that further low and then started an uptrend continuation to the major trend, that's where we are looking for another entry opportunity. As progressing with the session, we will be coming on live again, guys, in just a matter of 3.5 hours. I'm coming on live again for another live session we'll be conducting here to trade the NY session. Also during the FOMC I'll be on live, so don't miss out any part of that to trade with me every day in this live session. Also make sure you explain how use the ATR coach. Yeah, there will be more explanation in our previous session as well. ATR is very important to look at when you especially looking at support or resistance retest, and that's what the biggest trade comes in play, and we'll be discussing more on the previous next session as well. In the meantime, stay connected by joining the Telegram that you can find link below this video for more updated education as well as analysis. So I'm sharing with you the premium the free Telegram link here, where also you can stay connected by joining there for more education. Once the market, you can see this is where there's a local drop here, there's a fair value gap. We would like to see the market has got a strong rejection from this support level for a re-entry in this market. That being said, thanks for joining here, and I'll see you again very soon, guys, trading live again in this market. This is bull market. Now we are looking at bullish entry later this afternoon, and also there will be analysis coming very soon as well for more education. Thank you, and I'll see you again very soon in this market trading live in 3 hours time.